Let's say I create a company in the UAE. I'm a US citizen, and the company never has any profits and never distributes any income. Okay, that's an interesting company, sir or madam. What do I have to report on my US taxes? Any forms that require completion? If it does not have profit and is an entity separate from myself as a person, do I have to pay US corporate taxes on it? That's a big question. Okay. So, as I mentioned earlier, when you are a US person, as you are, you're subject to taxes on your worldwide income regardless of where you reside. I take your point that a company is a separate legal entity from you. That is absolutely correct. But when it comes to international taxes, the US gets a bit counterintuitive. What do I mean by that? So when it comes to US domestic taxes, it appears as if the emphasis is on revenue collection, right? Did you pay this? Did you pay that? Okay, fine. When it comes to international US taxes, it's really counterintuitive because the emphasis is on reporting. So information collection, so data collection is more important. So data is gold, right? So, why do I say that for the IRS, data collection is more important for international taxpayers? Here's why. Because when you look at the schedule of penalties, both civil and criminal, they're disproportionately skewed, and in other words, they become very draconian when it comes to failing. When you fail to declare a foreign financial asset, a foreign investment, or some sort of foreign transfer of funds. So, okay, I didn't pay my taxes. Okay, we're in a low interest rate environment. You pay interest and some penalties, right? If you don't declare the existence of a company overseas, that's $10,000 per year. If you don't declare a bank account that you have overseas, or even the bank account associated with that company that you open in Dubai, that's up to 50% of the unreported balance of that company bank account per year, right? So it plus for unreported bank accounts, that could also be jail time. So it's not just aggressive civil penalties, but aggressive criminal penalties as well. So it gets pretty aggressive. So that's why I say it seems a bit skewed. But let's get to your question specifically. If you've invested in a company overseas, that may trigger Form 926 to indicate to the Internal Revenue Service, hey, I invested in a company overseas. And then you have a company that you form, so I guess you control it. So it's a Control Foreign Corp. That's a Form 5471 that declares the existence, and it gives the IRS an opportunity to see the details of the company, the income statement, the balance sheet, what the company's been up to, what line of work, any other shareholders. So the disclosure is pretty thorough. And I know you mentioned that if there are no profits and doesn't distribute any income, do you have to pay any taxes on that? So I think it's clear that you have to report everything as to whether any taxes are due for that company. If that company genuinely has no profits, obviously the financials will have to be done up to international standards. I'm assuming that you're going to use IFR S, International Federation of Reporting Standards. So when it says that it's not making money, it really is not making money, and it's not being, you know what I mean? It's not being engineered in a way that it deliberately showing a loss when it should not otherwise show a loss. So let's assume that it really is not showing a loss. Then yeah, there's no additional payments to be made. However, if there is a profit, then that entity may be subject to some deemed distribution rules under something called GILTI, which is a global intangible low tax income tax. So it's a creature created by President Trump's Tax Cut and Jobs Act back in 2017. So when you have a Control Foreign Corp, which this would be this entity in Dubai, and there are profits, and those profits weren't fully distributed, as to the shareholders, and basically you have stuff sitting on the balance sheet. You have some sort of retained earnings. So then there's some deemed distributions to you as a US shareholder, and those deemed distributions will be subject to tax on your 1040. So, and that's not your case, but if it is the case, we'd be happy to have a conversation with you and work with you on that. But generally speaking, you have a company outside of the US, especially if it's a Control Foreign Corp, you got to be very cautious when it comes to those rules. You want to declare the existence of the company. You want to declare the existence of its bank accounts. You may need to declare the existence of subsidiaries, just in case there's subsidiaries, and any partnerships or whatever. So there's a lot of disclosure. So disclosure. Get advice.
Please subscribe, like, share, and comment below. Our books and upcoming events are available at htj.tax. Email us at help@htj.tax to engage us, to advise on international tax or business matters.